Hi everyone. In this video, we're going to be comparing 4 emerging market ETFs that exclude Chinese equities. These are interesting emerging market plays because they all have slightly different strategies and compositions, so they could potentially play different roles in a portfolio. We'll begin by providing an overview about each of these, and then we'll delve deeper into the performances of each of them. And just a quick reminder, as always, this presentation is for informational purposes only, and this is definitely not investment advice. So first, why would you want an emerging market fund that excludes Chinese equities? All of these were built to solve the same problem. Many emerging market ETFs include too much China exposure. These ETFs are interesting because they dial back the China-related risk, but they focus on other countries with growth potential or other good things going on with them. Thus, these offer a different approach to emerging markets than a lot of mainstream ETFs, such as the iShares Emerging Market ETF, ticker EEM, or the Vanguard Emerging Market Stocks Index Fund ETF, VWO. These ETFs that we cover here offer options to investors who want emerging market exposure without significant exposure to China. These are the 4 ETFs we'll be covering here. First is the iShares MSCI Emerging Markets ex-China ETF, ticker EMXC. This is the baseline option. It's a typical passive ETF that tracks a straightforward index, and it has the largest amount of assets under management of all the ETFs we'll be covering here. Think of this as kind of like a benchmark, plain vanilla way to get exposure to emerging markets without China dominant in the portfolio. Second, the Global X Emerging Markets ex-China ETF, ticker ENM. This is an actively managed ETF, and instead of just following an index, the portfolio managers are trying to pick stocks they believe will outperform. The idea is to potentially add value by being selective, though as we'll see in a moment, this comes with some trade-offs. Third, we'll look at the Matthews Emerging Market ex-China Active ETF, ticker MEMX. This is also actively managed, but with a more fundamental quality growth tilt. It's smaller in size compared to the others, and Matthews emphasizes research and more concentrated exposure. So the picks in this fund reflect stronger management conviction. And finally, we'll cover the WisdomTree Emerging Markets ex-China ETF, ticker XC. This one takes a different approach. It uses a rules-based investing strategy using what you'd call factor or alternative weighting. Instead of trying to rely purely on market cap, it applies screens and country caps and excludes state-owned enterprises under specific criteria. It also excludes Taiwan and South Korea, and the end result here is that the portfolio looks noticeably different from the standard MSCI index. Here's some general information about each of these ETFs. I'll go through this pretty quickly. All of this information is valid as of September 2025. First, we have the iShares MSCI Emerging Market ETF. This is the passive fund that we mentioned before from BlackRock. It tracks the MSCI Emerging Market ex-China Index. It was launched in 2017, and it has currently about $13 billion in assets under management. It holds more than 650 stocks, with the top 3 holdings being Taiwan Semi, Samsung Electronics, and SK Hynix, a Korean chip company. So it's got a bit of a tech tilt, though it also has considerable weighting in financials and materials. By country, it's heavily in Taiwan, India, and South Korea, followed by Brazil and South Africa, and this is the more benchmark style choice for ex-China exposure. Next, we have the Global X Emerging Markets ex-China ETF. This fund is actively managed. It's actually converted from a mutual fund under Mide Asset with the goal of long-term capital growth through stock picking. It's much smaller with around 28 million in assets under management and just 49 holdings. The portfolio is concentrated, and 2 of its top 3 positions are other Global X country ETFs, the India Active ETF and the Brazil Active ETF, along with Taiwan Semi. This kind of structure means that part of the fund's exposure comes indirectly through other products rather than their direct holdings with individual companies. By country, it's dominated by India, Taiwan, and South Korea, with smaller allocations to Brazil and Saudi Arabia. Then we have the Matthews Emerging Market ex-China Active ETF, MEMX. This is a fundamental stock picking fund launched in 2023 by Matthews Asia. It's very active with about 33 million in assets across 89 holdings. The top names include Taiwan Semi, Samsung Electronics, and a local listing of Taiwan Semi, which shows how it sometimes holds both ADRs and local shares of the same company. Country exposure is led by Taiwan, followed by India and South Korea, with smaller weights going to Brazil and South Africa. So MEMX offers smaller, growth-oriented tilt with more focus on company fundamentals. Finally, we have the WisdomTree Emerging Markets ex-China Fund, ticker XC, which uses a rules-based approach to allocation rather than being purely market cap weighted. It follows the WisdomTree True Emerging Markets Index, which excludes China, Taiwan, and South Korea, and state-owned enterprises. And it caps country weights at a max of 35% and individual holdings to 5%. This avoids overconcentration of any one country or stock. The fund was launched in September 2022, but it was significantly restructured in mid-2025. So this methodology is still new. This also means that the data we're going to look at does not reflect the performance of this updated strategy. Currently, there's about 90 to 91 million under management, over 500 securities, giving it broad diversification. And what stands out about the holdings in this ETF is that none of the positions dominate. Each of them is around the 3 to 5% range, which gives XC a much different risk-return portfolio compared to the other ETFs in this category that either lean heavily on 1 or 2 mega caps or Taiwan Semi. Here is the performance data for these ETFs. All of the data here comes from ETF Database, Yahoo Finance, and or official documentation for these ETFs, as well as some other similar sites. Some of the data was difficult to find or was inconsistent, so we provided ranges when appropriate. Here, I'm not going to read off these one by one. You could take a look at the slide if you're interested in this, but instead I'll just summarize the bigger picture that you might want to take away from all these. Overall, EMXC has the most complete track record with solid performance across multiple time horizons, a decent yield, and moderate volatility. It could be considered the benchmark among these 4 funds that we're going over here, and fairly vanilla type of option. EMM and MEMX don't yet have long track records. So far, MEMX has delivered competitive short-term returns, although with a bit more volatility, while EMM has been less volatile, but consistently trailed EMXC in performance. Finally, XC has lagged in performance so far, but is still relatively new with a short track record. The rules-based approach means greater diversification and less concentration than the other ETFs, and if that style of exposure is something that appeals to you, it could be worth keeping an eye on. Again, the performance data here for XC is not yet reflecting the newer strategy that's been adopted, so you may want to factor that into your consideration as well. So for now, it looks like EMXC is the most proven ex-China option. There are active management options like EMM and MEMX that add risk or complexity, but they have not yet showed a consistent upside. XC is still new and evolving, and the performance of the newer strategy is yet to be seen. That concludes our presentation of these ex-China ETFs, and we'll be posting more content about different types of emerging market investments in ETFs on our site, vinaedge.com. Please check it out if you're interested in emerging markets. Just a quick reminder, this presentation is for informational purposes only, and it is not intended as investment advice.